Alright guys, welcome back. I'll be giving you guys a model that you guys can use every single day. Okay, this works perfectly with Asian pairs, especially AUD and NZD JPY. Okay, so AUD JPY, NZD JPY. The reason why it works so well, Sydney Open, Tokyo Open, right? Those two pairs probably the best. You guys can try with other pairs, but I've had the most success with this pair. It's a very, very simple model. Almost repeats every single day, right? And we'll talk about profit targets and stop loss placements and all that. But it's very, very easy. You don't even really need a daily bias, right? So I'm really simplifying it for you guys. Those that can't, join the mentorship, please utilize this. Please utilize the free videos I make for you guys. And those that can afford the mentorship, I highly recommend. But let's not waste time. So again, what we're going to do is, as you can see in my right-hand side, I have all these pairs. We're just going to put our focus on NZD JPY and AUD JPY, these two pairs. And what you want to do to make this very, very easy is go to the indicators and add a indicator called vertical, if I can spell it, vertical timelines, right? This one here, the first one by my journal WISP. Okay, once you have that indicator on, you're going to turn it on, okay, and then you're going to put for your inputs, time 1 is 20, time 1, so your second time 1 is 22. Okay, make sure using UTC -4 New York times. Sometimes it'll be -5 due to daylight savings, but just as long as it's New York, you're fine. Okay, so this goes within the Asia session, right? Asia kill zone. So you already have time on your side. Okay, so you don't have to worry about time. All you have to worry about is price. And as I said earlier, we don't need to really put our emphasis on the higher time frame. All right, our emphasis should be on the 5-minute and our fair value gaps. Very, very simple. Our trading time is these two vertical lines. Okay, this is at 8 p.m. and this is at 10 p.m. So we have this 2-hour gap where we're looking for our trades. Okay, this works much easier once you know the concepts I have in my Discord, right? About just having a bias, some sort of narrative, etc., etc. So if you do want to have a insane win rate, okay, using this, there is extra confluence in my Discord for my students. Okay, but if you already have experience and you already don't want to join, cool, I'll still give you guys a source. I'm not greedy like that, but again, please use this wisely. Don't just blindly trade it. Probably will still make some bread, but again, I'm not a financial advisor. Just want to make that clear. Trading does have a high risk, so please know what you're doing. So the first theory or the first process you're going to be going is looking for some highs, okay, and some lows. Where'd that line go? For some highs and lows that are swept within that time, okay, that are swept within this time. If you don't have some sort of bias or some sort of context of where the drawn liquidity is, right, you might decrease your win rate by a lot. So just have some sort of drawn liquidity, equal highs, session highs, whatever you guys are doing, right? I don't want to drop too much source out of respect for my students, right? But just have some sort of target, a little bias, okay? You don't have to do the whole daily, top down, etc. Just have some sort of bias. What's the higher time frame saying? Done. Okay, cool. And the way it works is we want to see a low swept in this specific time segment, followed by a displacement. How do we know price is displacing? When it creates a fair value gap that is respected. So what we can do here is as simple as this. As we can see, we have a liquidity sweep of this low. And what is happening next is we see price reject from this low, right? So we have time and price aligned now. Beautiful. Then you're waiting, or you could buy the first fair value gap, stop loss here, because we're assuming price is now reversing here. What are you going to target? Your drawn liquidity or a simple 2R as your first partial. This works like magic when it's just a 2R and you partial aggressively. And if the trade runs, it runs. If it doesn't, cool. You've made your 2R, done. And that's pretty much the system, right? But of course, understand this only works in AUD JPY and NZD JPY. We'll look at multiple examples. I'll give you guys multiple examples and some even trades that may have gone wrong, right? Just to show you guys the ins and out, right? It's not a 100% win rate system, okay? And I don't want to give you guys something that's just going to, hinder your progress in the future, okay? So liquidity sweep here in this specific time, right? 8 to 10, followed by a fair value gap. So followed by displacement, and we want to see price respect that fair value gap, and a partial or a full TP at 2R. Beautiful, right? And the beautiful thing about this vertical line is it applies when the chart is printing, and it also applies back here, okay? So what we can do here is we can follow price, okay? And sometimes it might get tricky if you don't really know the high time frame, and sometimes you might have to play defense, okay? This does happen every single day, right? But that doesn't mean it's going to be a winning trade. So keep that in mind, okay? If your bias here is liquidity has been swept here, and now you're entering off a fair value gap right there. I don't know if this fair value gap got tapped in this broker, so which we'll see. It did, right? And what are you going to partial at 2R? Very, very simple. So you have to have some sort of bias and understanding what is a real top and what is a fake top, okay, which I go into in my Discord. So I know which high will be taken out, which low will be taken out, okay? Another thing, if you don't have that sort of understanding, what happens is you're going to be taking trades like this and you might get wicked out. So be very, very careful of that. Okay, so we have two trades, potentially both winning, right? Again, this is hindsight, but I have used this prior. One thing you don't want to see happening is there is no fair value gap mitigations here, and price actually mitigates a fair value gap a bit too high up, where our stop loss is now 22 pips, okay, which might not warrant a winning trade, right? Because we need the trade to run this much to get our 2R. So this would have been a loss, okay? Very, very interesting. So that would have been a loss, okay? And I'll continue to look for examples for you guys, and I would look through NZD JPY too, okay? But again, very, very simple. And if you have other concepts, it doesn't need to just be fair value gaps. Keep that in mind. It could be other concepts that you guys want to use. Here, what do we have here? We have liquidity sweep at a designated time. And what we can do here is you could enter off your change state delivery or your N block, right? N block is an FX block, which is exclusive for only my students, which I would not be showing example here, okay? But let's say you entered off this fair value gap. You have to understand the draw should be your target here. So a 2R trade. Why did we take a later fair value gap here compared to, where was it? What was the example that I showed earlier? Later fair value gap than here is we understand what our draw on liquidity is. Here, the market is obviously bearish. So this is a manipulation, right? Then the manipulation, we get a total soup and then price melts lower, okay? So if there's no entry, you're probably on the wrong side of the market regardless. So keep that in mind. Here, our stop loss is 14 pips and our TP is about 30 pips, right? So we're still banking a 2R trade like that. And we're not really, wondering where price will reverse. Here, with this example, right, we have all these relative equal highs that are swept in a bearish market. That is a potential entry for a short, not a long. So keep that in mind, okay? What do we have here? Liquidity sweep right there. Was this one also swept? Was it SMT, right? Both of them were swept. Beautiful. And what is our entry? This fair value gap right here. Stop loss above the high, and you're targeting a 2R trade. How simple is that? Very, very simple, okay? This one here, was this a SMT, right? Or are you trying to short a bullish market, right? Maybe this high as your liquidity sweep, and you're trying to short a bullish market, and you're getting wrecked, okay? So have some sort of bias. And for my students here, we know how to trade these sort of price actions, so you're very lucky we're not getting wrecked. Another beautiful example here. Stop loss, liquidity sweep here, bullish order flow, we have a overlapping PD array, which are very strong, and you can have a limit right there. Stop loss is 18 pips, right? Can you look to the left? I tell my students don't look to the left because we usually trade order flow, not structure, okay? But in this case, since we're just using the 5-minute, you can look to the left and find some sort of, target that aligns with your 2R. Very, very simple, okay? Again, 8 p.m. to 10 p.m., you're waiting for a liquidity sweep, followed by a fair value gap displacement above or below, depending on your bias. What do we have here? We have a sweep, okay? Sweep here in a potential bearish market. And then followed by a fair value gap right there. Stop loss just above the high, accounting for spread. And your TP will be a 2R. Just like that. Beautiful. For these sort of trades, I don't recommend going to break even, right? Unless you've already partialed or it's already ran above 2R. It doesn't really make sense to go break even in a 2R trades, right? You're better off just firming the loss or firming the win. What's some more examples I could provide for you guys, right? Let's go on NZDJPY now, and let's go back in price where it would have been a bit similar than AUDJPY because both pairs do move very, very alike. Let's go down here, okay? Okay, relative equal highs being swept, failed to displace below, very, very interesting. Buying the first fair value gap, stop loss there. Where is our 2R trade? Right there, okay? That is 2.3, our 2R trade would be right there. Beautiful, right? Very, very simple. And if you guys can milk this every single day, you guys will outperform almost every trader out there, okay? Besides me. Okay, no liquidity sweep, swept this, but no fair value gap, right? So no trade in that context. And make sure you just follow price through, okay? No sweep here, maybe SMT, maybe a fair value gap to these relative equal lows. But other than that, I'm not going to check if there's SMT. I'm not going to waste your time. You guys can do that for studies. Okay, what do we have here? Not much of a liquidity sweep here as we still displace. But what happens here is we sweep this liquidity as we fail to displace below. If liquidity is swept followed by instant bullish order flow, all right, is most likely a wick in a higher time frame. What are you going to do here? Fair value up there, stop loss right there. What is your TP? A 2R trade, just like that. Beautiful, right? But is this something you would take in real time, right? Is there some sort of target towards the left in a high time frame where price will, most likely take? For me, this isn't something I would take, right? I would rather enter on a fair value gap like this with a potential tighter stop loss if necessary, okay? But nonetheless, still works, right? So you guys can still, have your own system regarding this, have your own parameters. What else do we have here? Is anything of interest? Nothing really. So it's, I'm still picking and choosing what I'm taking. It is in hindsight. So this is what I want you guys to do. Go in hindsight and collect some data, right? Prove that it works. Prove that, it is something that you can trade. So here we have this sweep here at designated time, or you could also use this one. Both is fine. Beautiful. Followed by a fair value gap displacement below, stop loss above the swing high, and what are you on target? A 2R trade, and partial if it runs. And you are going to have runners like this that run absurd amount of RR, right? So let's say hypothetically we held this to fucking, down here, 86R. Realistically, that's not what we're going for, right? It's a 2R trade. If you do want a partial and be aggressive with it, let it run. This is still going to give you extra 5, 10, 15, 30, 40 R if you manage it properly and if you have some sort of high time frame bias, and you could really just, increase your equity curve and just compound your account very, very quickly. What else do we have here? Okay, we have potential liquidity sweep here, right? We did close below, so when you do have sweeps like this, it is most likely a fair value gap in a higher time frame down here. So that is where the retracement is occurring. So you have your total sweeps. It's not as clean, but you're not getting your bearish fair value gaps being respected. You rather have your bullish fair value gaps like this being respected. Stop loss there, 2R trade, bang. Very, very simple. Okay. I guess you guys know the gist of it now. So that is going to be the video. Summary, 8 to 10 p.m. New York time, waiting for a liquidity sweep in the 5-minute. Target 2R, have some sort of high time frame bias. It doesn't need to be, you know, where you're spending hours on a high time frame bias. Just have some sort of bias that where's price trending higher or lower, right? And then wait for your liquidity sweep there. Easy as.